Hello, I'm Haider Malik, host of the MEMI Financial Group podcast. Today's topic is Calgary Fleet Lease Buyouts, securing ownership at end of term. If your service vans, dump trucks, or tractors are nearing lease maturity, buying them out can lock in equity, avoid renewal costs, and deliver long term tax benefits. Here's how to plan and finance your end of lease purchase. 1. Why buyout at term end? Capture residual value. Leases set a predetermined residual, often 30-50% of original cost. Buying out lets you convert that value into equity rather than forfeiting it. Cost avoidance. Sidestep excess use fees, mileage, hours, wear and tear, and renewal rate markups, which can add 10 to 20% to your total lease cost. Tax optimization. Owned units qualify for capital cost allowance (CCA) and interest deductions when financed, improving after-tax cash flow. Customization and life cycle control. Ownership lets you modify upfits, ladder racks, service bodies, or run units beyond the original lease term. 2. Structuring the buyout. 1. Verify residuals versus market. Pull your lease end residual schedule and benchmark against local used truck auction prices, e.g., Calgary truck auction, to confirm it's fair. 2. Choose your payment path. Lump sum cash. Immediately pay the residual if you have excess working capital, avoiding new interest costs. Equipment loan. Finance the residual over 24-60 months at prime plus 1 to 2%, matching expected remaining useful life. Finance lease conversion. Convert your operating lease into a capital lease, small buyout down payment plus structured lease payments, keeping some lease accounting benefits. 3. Security and collateral. If borrowing, secure the loan solely on the bought out units to avoid cross-collateralizing your entire fleet. 3. Financing options and considerations. Term loans. Bank or credit union loans over 3 to 5 years at competitive spreads. Prime plus 0.75, 1.5%. Ideal for spreading cost evenly and claiming full CCA. Equipment line of credit, ELOC. Revolving line secured by existing fleet. Draw only what you need for the buyout. Repay as trucks generate revenue, then redraw for the next unit. Sale leaseback hybrid. For units with minimal residual, consider a mini sale leaseback. Sell the unit at fair market value, then lease it back under an operating lease to monetize equity and continue use. 4. Negotiation and timing. Early buy incentives. Many lessors offer 2 to 5% discounts on residual as an early commit if you agree to buy out 60-90 days before lease expiry. Inspection and repairs. Conduct a pre-return inspection 30 to 60 days before term end to address minor repairs yourself, avoiding higher lesser damage fees. Dealer alignment. Work through your Calgary dealer's finance desk, e.g. Alberta Fleet Sales, to bundle residual financing with parts or service agreements for better rates. 5. Integration and post-buy management. 1. Title and registration. Transfer titles immediately. Update your insurance and commercial registrations to reflect ownership. 2. Maintenance strategy. Reset your maintenance schedule, replace worn components, renew warranties or service contracts, so ownership begins on a fresh baseline. 3. Life cycle planning. Map each unit's remaining life by mileage, hours, align future purchase or replacement cycles to avoid any midlife cost spike. 3 action steps. 1. Gather residual data. Pull lease end residual schedules for all units due in the next 6 to 12 months. Benchmark against Calgary used truck values. 2. Model buyout costs. Build a comparison of cash purchase versus financed loan versus new lease costs over 60 months, including tax impacts and maintenance savings. 3. Lock in finance. Secure early buy incentives. Choose the optimal financing path, loan or ELOC. Finalize your commitment 60 days before lease expiry and execute the buyout to capture equity and control. By verifying residuals, selecting the right financing, negotiating early buy incentives, and resetting your maintenance and life cycle plans, Calgary fleets can transition from lease to ownership smoothly, capturing equity, avoiding hidden fees, and optimizing total cost of ownership. I'm Haider Malik. Thanks for listening, and here's to securing your fleet's future through smart lease buyouts.